Hi, this is Mark with ValueCharts.com. This is one of the best setups that I tend to find in the markets over time. And what I'm referring to here is a situation where we have a daily price chart in undervalued or moderately undervalued territory. And I'm going to go ahead and pull that up right now. We're looking at the continuous cotton chart. We've had a very nice up run cotton here over the past several days. And now we have a nice expected correction here. We're down in the moderately undervalued territory. The bull market still is very intact structurally. And then if I drill down here to 120-minute charts, you can see that we have a beautiful bullish divergence forming here. Now, what that means is if I take the decrease in momentum here, notice how the histogram bars are decreasing here. They're getting less negative because the selling force is less negative as well. And then notice up here on the price that we actually had a lower price. So we had prices go to a new low. We have momentum decreasing here. So we have a bullish divergence on an intraday basis. And then we also have a moderately undervalued nice correction on a daily basis. So cotton probably has to be one of the stronger trends we're looking at in the futures markets in general. But certainly with this type of setup, this is what I consider to be an extremely powerful setup. Now, the possibilities from here are that we either get a kind of a fizzle out to the upside in cotton here, which is one that is probably less likely in my opinion, and we don't really see kind of a strong resurgence of the uptrend over the next couple of hours to days. Or the other option is that this market could really put in a bottom here and then really start to surge higher in continuation of the bull market. And I see that as a likelier scenario. But either way, this is a great trading opportunity. You don't have to risk anything below the low here. Notice that we poke down into significantly undervalued prices here on the 120-minute price bar. That's a lower red bar segment briefly as prices took out the stops below the old low here. And now we're starting to recover a little bit. So in a situation like this, you really don't need to risk much. In this case, it looks like the risk would be somewhere around slightly over 50 ticks or so, a half a point below the low right here. And if this is intact and this ends up being a pretty good signal, that should be the low of the correction. So now never say never. There could be a scenario where we might see another charge towards this recent low. And what you need to do in that case is really watch the tone of the market, see if this market is starting to gather itself and regroup to head higher, or if it's actually reversing direction and heading lower. So you can tell a lot about how the market behaves when it takes out a previous low. In this case, it stabilized and immediately went right back up below the previous low, which is a strong indication that prices could head higher. That's all we have for this video. Keep an eye on cotton. I think it's a great buy at these levels. We'll see you in the next video.